This is Satya Pratiman of Cirrus Research. The latest briefing report is just out. The title is Small Caps and Gold Thrive as Fed Offers Backstop. The August markets became quite broad. What we saw was the NASDAQ, the S&P 500, those results were fairly flattish, in fact, a volatile month. But what you'll also notice is the Russell 2000 jumped by about 7%. So the question is, what's underneath this? And a lot of this, I think, has to do with interest rates. The fact that we're now at a consensus that the Fed, expecting the Fed to be cutting rates in September, is something that's really reversing the course of the potential sell-off of deep cyclicals, the consumer cyclicals, and so on. So I think what's happened here is that with that certainty surfacing, it is allowing a reversal. The other part, though, that's interesting, which was less spoken about, was really how gold also jumped about 5%, really on the heels of a very strong 12, 18-month run. Then the question is, if there is a real slowdown, inflation shouldn't be a concern, and yet gold is rallying. In fact, the term structure from the very short end of treasuries out to the 30-year, what we're noticing currently is a much steeper yield curve compared to, let's say, just 9 months ago. And so what's behind this could be a number of things. Number one, it could end up being inflationary concerns. It's also the path of the fiscal debt structure that we've got in the U.S. These are elements that are causing the bond market, global bond market investors to really price in a very different risk. So when we look at the U.S. as U.S. equities are pricing for a slowdown, it just doesn't show up in the bond market. It's not showing up in gold. And I think that's why this ties back to the rally of the Russell 2000. In addition to some of the deep cyclicals that have lost ground, what you also have is a very discounted U.S. small cap market. In fact, if you look overseas, the U.S. large caps relative to the rest of the planet is incredibly expensive. So these are the elements we think that's driving this rotational market. The bottom line is that even if rates were to get cut, the real question is whether or not the yield curve would begin to flatten. If the yields back up further, this rotation you're seeing in August is a beginning of things to come. Take a look at the full report, and as always, happy to take your questions.